We're here with Randy Blach, CEO of Cattle-Fax, and wanted to talk with Randy a little bit about some of the trends that we're seeing in the market. And Randy gave a great presentation this morning on that topic that was about 45 minutes, and I know that you probably can't summarize the whole thing in 3 or 4 minutes, but I wanted to see if you could just give us a few kind of quick points of what you're seeing in international trends, domestic trends that'll affect the cattle market and grain markets going forward here over the next few months.
Well, John, I would say that most of the macro trends that we've discussed here over the last 12 months have not changed much. We continue to see the beef cow herd shrink. It'll be smaller as we go into 2012 again as a result of the drought situation we've seen in the Central Plains and Southern Plains regions. The real positive things that we see taking place out here is a continued expansion of the export markets. Our exports are up in excess of 25% on beef this year. Pork exports are up nearly 20%. We continue to see tremendous demand out of the Asian markets for our beef and pork products. So that's been a very positive situation. Our domestic demand has been better than it was a year ago. It's not great, but it's better than it was a year ago. We'd like to see these unemployment rates come down. We'd like to see the economy growing at a more rapid rate, but that's not happening yet. But you put it all together, I think the real positive things is export demand's growing, stable to growing domestic demand, supplies are basically flat, and prices and profitability have improved significantly as we've moved into this new and higher trading range.
And we saw a grain report today that looked a little bit more positive for corn prices for the cattle feeders, and might help at least a little bit in the short term to see those prices stabilize a bit.
Oh, no doubt about it. You know, this corn situation has been it's been a moving train here for 12 months as the corn market's basically been in a higher trend since July of 2010. So right at 12 months now, corn has gone from $3.50 a bushel to $8 a bushel in that time frame. So it's been a big deal. The corn report, where the USDA came out with the larger planted acreage number, that took some of the pressure off the stocks reports that we see out of that. We've got another 2% on the stocks to use ratio, which can effectively lower where new crop corn, the clearing level on that, we could see that get back in here to the mid fives here over the next 30 to 60 days instead of the $6 to $6.50 area. So effectively you've taken 50 cents to $1 a bushel off where these corn prices could cheapen back to.
Well, that's good news. And another thing you talked about was the hide and offal values and how that's contributed to higher prices for the cattle feeders over the recent months and over the past year, and demand for hides in particular has increased as the economy has improved, and yet we have fewer cattle to produce those.
It's been a big deal. You know, hide and offal values up in here are approaching $14 a hundredweight live weight. That's a big number. You know, the highest number in history of the business. Export demand, the value of the dollar has been cheap, which has really stimulated export activity on hides and obviously variety meats, and and global cattle numbers have been declining for 5 years in a row now. So with that decline in global numbers, there's just not enough availability of hides to meet that growing demand, particularly in these countries that their economies are recovering at a much more quick rate than what we're seeing here in the U.S.
Yeah.
So, you know, it's part of this global trade. You know, it's a positive situation, and that's the beauty of global trade. Even if we're not hitting on all cylinders here, we're still a beneficiary of what's happening in other parts of the world by being a participant in that market.
So there's a lot of good news in the market, but you also mentioned and cautioned the cattle feeders that there's still a lot of risk in the marketplace, and that people have to be aware of what some of those risks are and some of the volatility that you expect to continue to see both in the input side and cattle, potentially in cattle prices?
I've never seen the market environment as volatile as it is now, and I don't think that's going to change anytime soon. Incredible volatility, incredible swings. We have to be able to manage the risk on these things. It's just there's too much at stake, and I've seen tremendous progress in the industry where we've made some tremendous strides as far as being able to manage and mitigate some of this risk, both on a price and cost standpoint. And that will serve us well if we'll continue to focus on that down the road.